AI requires a lot of compute power, and the cost for your AI workloads can spiral. That is, unless you're running on OCI, Oracle Cloud Infrastructure. This was the cloud built for AI, a blazing fast, enterprise-grade platform for your infrastructure, database apps, and all of your AI workloads.
Right now, Oracle can cut your current cloud bill in half if you move to OCI. Minimum financial commitment and other terms apply. Offer ends March 31st. See if you qualify at oracle.com/WSJTech. Oracle.com/WSJTech.
Good afternoon. Getting right down to business here. We're doing it live, doing more at 4 weekday afternoons, right after Guy Benson, 3 on every afternoon on 790 KBC. And we do all this just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air here, 790 KBC, streaming live online worldwide. KBC.com and the on-demand Mottek On Money podcast at KBC.com, Apple, iTunes, YouTube, and all of your favorite podcast platforms. We have a winner, another record high for stocks today. Stocks finishing higher with the S&P 500 hitting its record high close, the third one of the year, after the notes from the Fed's last big policy-setting meeting suggested the Fed is still biased toward easing rates. The yield in the 10-year note slipping for the third time in the past 4 trading sessions, about now at 4.54%. That's the one that impacts the fixed-rate mortgage rates. As the yields came down, stocks edged higher, with the Dow finishing higher by 71 points. The S&P 500 up just about 15 to a record high of 6,144. And the NASDAQ ended higher by just about 15 points at 20,056. Some Fed managers did not see much more room for interest rate cuts, according to the notes from the Fed's last policy-setting meeting. Those notes noted that a few of the Fed officials believe the current 4.25% to 4.5% target range of the benchmark Fed funds rate may not be far above its neutral level. And to achieve a soft landing for the economy, the Fed is aiming for a neutral level, which neither boosts nor dampens economic growth. The Fed said it might be a good idea for the Fed to pause or slow its balance sheet runoff until Congress passes an increase in the federal debt ceiling, according to the notes from the meeting that were released today. Looks like by some measures, the big cap stocks trading at the highest or near the highest premium to fundamentals, such as sales and profits, since the end of the dot-com era. That's getting a lot of attention on Wall Street now, as MarketWatch notes, now that the burst of optimism that suffused financial markets following the president's electoral victory has started to wane a bit. Investors appear to be growing increasingly fixated on that, according to a recent survey of market participants. Meanwhile, drama in Washington surrounding extending the president's 2017 tax cuts. If those tax cuts, by the way, are not extended, we will see the biggest tax increase in history. We'll get the latest on all of that from Veronique de RUGY, a senior research fellow at George Mason University Mercatus Center, located in the Washington, D.C. area. And the scrutiny of how taxpayer dollars are being spent these days, especially as it relates to illegal immigrants, President Trump and Elon Musk facing pushback from Democrats on the Department of Government Efficiency, despite highlighting some outrageous spending of taxpayer dollars on dubious things. We'll talk to media expert, author, and PR guru Michael Levine about all this. He'll be joining me live later this hour. But first, on your money, the markets, the economy, and the whole works. Now joining us live, money manager Gabriel Wisdom, managing director at American Money Management, based here in Southern California, also author of Wisdom on Value Investing. Gabriel Wisdom, thank you very much for taking the call on what's turned out to be another record-shattering day for the stock market today.
Well, that's right, Frank. You know, when you talk about cycles, sometimes people raise an eyebrow and, they wonder if you're a believer in magic or astrology, but the cycles really do occur. You just can't set your clock to them. And we are entering what I believe is an austerity cycle. The president took a page from the last austerity cycle when President Bill Clinton was in his first year. And specifically, Robert Rubin at the time and James Carville were warning Clinton that he had to maintain fiscal discipline, and there were layoffs, there was downsizing of the government. It was quite painful, obviously. And when you get more debt than you have GDP or income to service the debt, and that's the problem we're facing, a government has several choices. You can print more money and reduce the interest rates to zero, but then everybody pays for it through inflation. You can increase taxes, We've seen that occur, and that's exactly what the Clinton administration did along with downsizing. That usually works to balance a budget. You can downsize and you can tighten the belt. Austerity. No politician wants to be blamed for this because it's hard to get reelected. But this administration, I'd have to say, has the guts to do it in year one. And so, we all remember the Gunsmoke series starring James Arness as Dodge City Sheriff Matt Dillon. Here comes the new gunfight at Dodge City.
Very interesting. We're on the air live with Gabriel Wisdom with American Money Management, and you reminded me of those days in the early 90s, and of course the election in 92 focused heavily on the federal deficit with Ross Perot in the mix back then, right? In order to fix the engine, you got to open the hood, and it looks like this Doge entity has certainly opened the hood here in a big way. And back in those days, Newt Gingrich was on the scene, the Speaker of the House, and there was quite a fight when it was a big concern back then when the deficit was a lot lower than it is today. Now we're talking about $36 trillion here.
Well, that's right, and nobody likes this, but the austerity cycle, when debt is just too high relative to the income, we know what to do in our own household. You tighten your belt, you spend less. The Federal Reserve is recognizing this. The Fed minutes were released today, Frank, and it looks as if the 19 officials that participate in interest rate decisions at the Federal Reserve, they indicated they want to see further progress here, and there was also some additional inflation that showed up. Now this is old inflation data from the prior from prior year, but last week the government released this data that suggested inflation was actually getting quite a bit worse. Consumer prices were up 3% from a year ago. The Labor Department said things aren't getting better. So the Federal Reserve is mixed with regard to where interest rates ought to go. And my hunch is they stay higher for longer.
All right. In the meantime, we did see a positive reaction to the notes from the Fed's last meeting. Treasury yields came down. This is something that President Trump has said he wants to see happen. The longer-term rates coming down, the ones that impact the fixed-rate mortgage rates. Of course, he would also like to see the Fed lower rates too, it seems. But the focus of attention is on the bond yields, the benchmark Treasury yields, which impact the longer-term loans, including mortgage rates. What about this market here, and how much more did this thing have to run?
Well, I think it's got a lot further to go, Frank. And with regard to the long-term interest rates, the president is focused on the 10-year in particular. They have been coming down, and I think that's in reaction to these austerity measures and the inclination of the administration to reduce spending. And that usually means that investors are willing to pay less, or rather receive less, for lending money. And we're seeing it represented in the 10-year Treasury yields, which are down. The Magnificent Seven, those seven companies that led the market the last couple of years, I'm not so sure they're leading any longer. According to the data that I saw, 46% of the companies in the S&P 500, that's over 200 companies, are now outperforming the S&P 500. That's well above the 30% that we saw in each of the last 2 years. And the last 2 years, that was the lowest percentage of outperforming stocks since the late 1990s. So the market is broadening out to include these other left behind companies. Also, the DeepSeek phenomena, the Chinese AI company that makes AI services a whole lot cheaper, that benefits a lot of U.S. companies, assuming that there aren't any restrictions on its use.
Speaking of outperforming the S&P 500, last time I looked, gold was outperforming the S&P 500 in a big way, hitting at record highs recently. We did have that hiccup on Friday, but gold has moved higher again this week, up about 15 right now to 2,951. What about gold here? What is gold telling us?
Well, Frank, I think that gold is first of all, you're right. It's up. Year to date, it's up about 11%. You compare that with the stock market, the S&P 500, that's up less than 5%. Bitcoin's up less than 2%, though it's had a spectacular last few years, certainly. But I think what the gold event is telling us that there's uncertainty in the world. The gold rally began in February of 2022 when Russia first invaded Ukraine. And gold since then is up almost 30% since that war started. And of course, we know this all caused the U.S. to freeze Russia's dollar reserves, and now China, Iran, and Russia are continuing to scoop up more gold to diversify their international reserves. And in China, the Chinese citizens are buying not just gold but Bitcoin because they don't own property. They have no property to store wealth in. So gold and cryptos seem to be benefiting right now among the Chinese investors.
And lately, silver also has been moving higher. It's now above $33 an ounce at last check here. Is silver along for this ride?
I think so, Frank. Silver is probably my favorite because of just that physical ratio of silver relative to gold and the Earth's crust. It's just out of whack with historical valuations. If you were to measure silver as it compared to the amount of gold in the Earth's crust, it ought to be selling for far more than $32 or $33 an ounce. So I prefer silver.
All right, let's not forget the other one, platinum. What about platinum, which used to be a lot higher than gold, but these days trading below 1,000, while gold is almost at 3,000?
Well, platinum was a very important metal and still is, but it's not like it was. The data centers that require cooling systems to help the servers run more efficiently, the power infrastructures for transformers and generators and transmission lines. There's just a huge demand for some of the other metals now, and power demand is also going nuclear. We're seeing it again. There's a new cycle. So AI and power needs more of these other metals, not necessarily platinum.
All right, let's get to so-called digital gold, Bitcoin, and cryptos here. I know you do pay attention to what's going on. As our listeners know, we talk to the biggest fans of crypto as well as the harshest critics, and as well as those who are observing. What about Bitcoin right now? Let's take a look here. Hovering at around 96,500 or so, moving up about 400 here at the moment. It has seen a wild ride since hitting a record high following President Trump's inauguration into office less than a month ago. What do you see happening here in the crypto space?
Well, I think almost certainly we're going to see more broad acceptance of crypto, in particular Bitcoin. I don't think there's any doubt about it. I saw the Polymarket numbers, which assign a 63% probability of the U.S. creating a strategic reserve of Bitcoin this year. And that's up from 40% at the start of the year. And it certainly strengthens the case for Bitcoin to reach much higher prices. The big difference between the real thing, gold, the real gold versus digital gold is that, digital gold or Bitcoin trades like the NASDAQ 100. It's sentiment plays a big role, what you believe. And the real gold has actually protected purchasing power over hundreds of years through every kind of economic and geopolitical, crises. And so Bitcoin is pretty much untested here. But in terms of the trend, if the trend is your friend, I think it's positive probably for crypto.
All right. It is to be noted, here's something we haven't talked about in quite some time, but Garmin, the tech gadget company, they have GPS-enabled devices, among other things, and wearables and so forth, hitting a record high today, popping nearly 13%. Looks like moved on its earnings news. Is that one getting your attention, or anything else on the earnings front that stood out to you so far?
Well, Garmin is interesting. It's actually an open-air indicator for aviation, since every glass cockpit has either Garmin or one of the other tag-along manufacturers, but Garmin is clearly the leader. So that's a positive indicator, and I do like Garmin, though I don't own it. I also think that there are a number of other disruptive technologies that are pretty exciting. For example, along with AI, which came along basically with the large language models in early 23, we're seeing wide adoption there. Teachers are using it now, not just the students to cheat on their homework, but teachers are using it to produce their lesson plans. There's an app that responds to your emails more quickly. It helps format Excel spreadsheets for you. It does all this grunt work. I think Garmin plays a role in some of this technology, but I'm looking specifically at some of the other areas.
That is very interesting, and you reminded me you're also a pilot, so you know what devices are, what you're looking at there, the gauges and so forth. And a lot of people still talking about that miracle, really, that in Toronto when that Delta jetliner flipped over upon landing on a snowy runway there in Toronto. Delta stock has been gyrating this week, moved higher today, but that was really something.
That was really something. Now, they designed that wing to come off more easily. That's an innovation. It was a newer plane, and I think almost certainly that's what saved the lives of all
Everyone.
those passengers.
Yeah. At this point, Gabriel Wisdom, we'll ask you the big question here. Any specific places where you are putting money now and or taking it off the table?
Well, Frank, I mentioned the need for transformers for data centers, cooling systems, and the like. And I'm looking at a new exchange-traded fund. I don't own it yet, but it's the Global X U.S. Electrification Fund. It's an exchange-traded fund. It's fairly economical, but you get Exelon, which includes nuclear. You get Edison International, Eaton Corp, the British producer, Quanta Services, XL, Entergy. I mean, you get a nice broad range of these alternative electrical and alternative energy sources that help power the data centers. The symbol for this exchange-traded fund is ZAP. I'm looking.
That's a cute one. That's a good one. We won't forget that one. I love the way you often bring up the fun ticker symbols here. I remember Moo. What do you think of Moo, the agriculture ETF with egg prices so much in focus?
Well, I like Moo as well. That's the agricultural exchange-traded fund. I think that's a nice diversification. Now, I really wanted to own Moo back when potash, fertilizer, was in short supply. That's no longer the case.
Fantastic. Well, Gabriel, thank you very much for that very thoughtful and thorough assessment. As always, we do appreciate it. That is Money Manager Gabriel Wisdom, Managing Director at American Money Management, based right here in Southern California, also author of Wisdom on Value Investing. Gabriel, thank you very much for taking the call here this afternoon.
Thank you, Frank.
Out to the freeways now, 790 KABC. Mottek On Money continues here in 790 KABC. Good afternoon. Record-shattering day on Wall Street. The S&P 500 at another all-time high today, keeping its winning streak going after the Federal Reserve released the notes from the Fed's last big policy-setting meeting, suggesting that the Fed is still biased toward easing interest rates. The yield in the 10-year note slipped for the third time in the past 4 trading sessions after the Fed's January meeting notes were released. We did see the yield in the 10-year note ease to 4.54%. That's the one that impacts the fixed-rate mortgage rates. The S&P 500 rising another 14 points, extending its record-shattering rally, settling at 6,144, a new record-high close. The Dow moving higher by 71 points to 44,628. It's still below its all-time high, which we hit back in December when it hit above 45K. The NASDAQ of 15 points at 20,056. Taking a look at the movers today, we see Meta moving lower after that big record-shattering run-up, down nearly 13 today to 703 and change. NVIDIA down 17 cents at 139.23. Gold still shining, rebounding from Friday's pullback, up nearly $15 now at $2,951 an ounce. Silver still above $33 an ounce, of 10 cents to $33.14, and platinum of $2.30 at $988.50. Turning to the cryptos now, we see Bitcoin up about 400 at 96,571, Ethereum up 5 at 2,715, and Doge at the moment at 25 cents. Oil moving a bit lower now, down 11 cents at 72.14 a barrel. Delta Airlines moving higher today, 70 cents higher to 65.04. Taking a look at Garmin, that was one of the big winners among the S&P 500 stocks, up nearly 13%. The tech gadget company, GPS-enabled devices, among other things. Taking a look at the currencies here, looks like the dollar has slipped to 104 now versus the euro. We're at 151 against the Japanese yen, 125 versus the British pound sterling. Dollar will get you 20.47 Mexican pesos and $1.42 Canadian loonies. And now the latest news here in 790 KABC. Mottek On Money continues here in 790 KABC. Good afternoon. Let's talk taxes now. Will President Trump's tax cuts that he put into place back in 2017 be extended, or will we see the biggest tax increase in American history? House Republicans have released a budget plan now that sets the stage for advancing many of President Trump's top domestic priorities, providing for up to $4.5 trillion in tax cuts and a $4 trillion increase in the debt limit so the U.S. can continue to finance its bills. The budget plan also directing a variety of House committees to cut spending by at least $1.5 trillion, while stating that the goal is to reduce spending by $2 trillion over 10 years. Now, this budget blueprint represents the first step in a long legislative process that would allow Republicans to pass some of the top priorities in a simple majority vote. The House Budget Committee is expected to hold votes on the plan today. The House Speaker, Mike Johnson, predicted it would easily advance out of committee, and then he says we'll work with everyone over the week to make sure they're on board. Johnson set an ambitious schedule for moving the resolution and subsequent legislation, but there's tension, believe it or not, within the Republican conference about the scope of the proposed tax and spending cuts. Some want more in tax cuts than what is in the blueprint, while others want even steeper spending cuts. Budget resolutions often considered statements of priorities, but this latest plan is more than just a policy blueprint, as it provides specific directions to House committees to rearrange the federal money flow. Republican leaders are looking to cut costs of social services, especially Medicaid, as they seek massive savings. The Energy and Commerce Committee, which handles healthcare spending, is asked to cut $880 billion over the next 10 years, while the Education and Workforce Committee is asked to reduce spending by about $330 billion, and the Agriculture Committee is asked to save $230 billion, while the Transportation and Infrastructure Committee is asked to find at least $10 billion in cuts through 2034. As even some of the programs would be cut, money would be shifted to other priorities of the president, including a $100 billion boost in defense spending over the next 10 years through the Armed Services Committee, and an additional $90 billion for the Homeland Security Department, which is carrying out President Trump's massive immigration deportations. House Democrats critical of this budget plan. The Senate Democratic leader, Chuck Schumer, and the House Democratic leader, Hakeem Jeffries, held a joint news conference, accused Republicans of not taking action to lower costs for everyday Americans since securing the White House and both chambers of Congress. There's also concern from Democrats that the plan could lead to cuts in the safety net. We're hearing a lot of comments about that. Republicans say they don't want to take benefits away from those who rely on Medicaid, but they're considering requiring more able-bodied Americans to work as a condition of their participation. Now, to offset some of the costs of extending the tax cuts Republicans passed in the president's first term, they're also eyeing the possibility of ending some of the clean energy tax credits the Democrats have been championed and passed under the former President Biden administration. As House Republicans move ahead with these plans, we see that they're now pursuing a narrow effort focused on boosting border security and defense spending. Republicans have been debating since last year whether to enact the bulk of the president's agenda in one or two pieces of legislation. That's something else that's being discussed there. The Senate is moving on a two-bill track, while the House is moving on a one-bill track. Now it's unclear which side will win out in the end. The Associated Press reports the Senate Budget Committee advanced the narrower budget plan in a party line vote. It would allow $175 billion to be spent on border security, $150 billion for defense, and $20 billion for the U.S. Coast Guard. The budget would not include an extension of tax cuts, leaving that to be dealt with a second bill later this year. Senator Lindsey Graham, who's the committee's chairman, said in selling the blueprint that a majority of Americans support deporting immigrants who are in the U.S. illegally, but that Immigration and Customs Enforcement, ICE, as they're known, was running out of funding. He said more agents and detention space would be needed to allow the deportation effort. Republicans defeated some amendments from Democrats that included taking Medicaid and the Nutrition Assistance Program, known as SNAP, off the table from cuts. Senator Jeff Merkley, the top Democrat on the committee, said the amendments were focused on ensuring the process underway in Congress would not raise the cost of health care and other vital services for Americans. So a lot going on in Washington there over this extending the Trump tax cut bill. And Veronique de RUGY wrote a very thoughtful op-ed article which appeared in the LA Times. She's with George Mason University. Say that again? Wrote a very thoughtful editorial, and I'm told she is on the line with us now. Veronique, thank you very much for taking the call here, and you've written a very thoughtful op-ed extending President Trump's 2017 tax cuts to promote growth, but to cut spending too should be considered. Thanks so much for joining us, and give us your thoughts on what's being discussed there in Washington.
So I don't know. I mean, what's being discussed there in Washington is basically kind of growing the deficit quite massively. But what I suggested was that rather than giving the president a big, beautiful bill with a lot of spending and not a lot of actually spending cuts, and basically assumptions that we would get a lot of revenues because of growth and because of spending that probably likely won't happen, what we should do instead is actually focus first and foremost on the most pro-growth side of the extension of the tax cuts. We don't want the tax cuts to expire. It would be a really big tax increase on everyone. And the tax provisions that are going to be the most pro-growth, we should expand them on a permanent basis. And those that aren't, they should be extended only on a temporary basis to renegotiate later down the road.
All right. So how does it look at this point? How are things coming together there? I just went down the whole list of what's happening there as this sausage is being made there in Washington with this blueprint being presented and being voted on here. What do you think is going to happen? Will the 2017 Trump tax cuts be extended?
Eventually they will. The real question is going to be at what cost to taxpayers and at which cost to our debt. That's really the only question that matters today. I don't think anyone wants the tax cut to expire. Everyone understands that it would be a big hit to most Americans who've been actually kind of counting on those tax cuts to continue, especially because the tax provisions that are expiring are mostly tax cuts for individuals. But there's also an important one that is full expensing that is expiring, and it's basically the most pro-growth tax cuts that we have, because it does encourage enormous investment, and that raises not only growth but then wages for people. So I mean, it's important to extend them, but we can't do it without regard for the impact on the debt. And there again, everything is about the way it's going to look when you score the cost of this bill. Just to give people an idea, when they passed the Trump tax cuts originally in 2017, the projected deficit, allowed deficit, was $1.5 trillion. It eventually ended up, almost paying for itself because of the corporate income tax rate reduction that was permanent and because of the full expensing. Now, when you project extending just a small portion of the tax cuts, the projected cost is $4.6 trillion. So it's enormous. We cannot do this the way we did it last time. So it's going to have to mean more tax cuts that are extended on a non-permanent basis. So they did this last time. So we need to make sure that the ones that are more pro growth are expended on a permanent basis. That's how we are going to get the biggest bang for the buck, and that means more revenue, which pays for the tax cuts. And then we need to add some spending cuts. Spending cuts requires making sure that the original pay for in the tax cuts are extended, but it also means that there are a lot of special interest tax carve-outs that are removed. For instance, like a lot of the green energy tax breaks that cost Americans actually an enormous. It's an enormous amount, and it's a big handout for special interest.
All right, for anyone that wants to review your great op-ed article, it's in the on the LA Times website. Great that they picked it up, and certainly some important things that impact Californians especially, including the discussion extending the limits put on state and local tax, the so-called SALT deduction and mortgage interest deduction that's being watched very, very closely. Veronique, thank you very much for taking the call here today. That is Veronique RUGY, Senior Research Fellow at George Mason University at the Mercatus Center there in the Washington, D.C. area. Live with us here on Mottek On Money on 790 KABC. Frank Mottek here. Did you know that for more than 10,000 years, gold has been the greatest store of value and considered a safe haven asset to preserve your wealth? Now, with the U.S. debt at more than $36 trillion and climbing, the possible recession on the horizon, and the development of the digital dollar, central bank digital currency, it's more critical now than ever before to safeguard your assets like your cash savings and retirement accounts with physical gold. Opening a gold IRA is one of the best ways to secure your wealth and create a stable financial future. Stop worrying about your retirement and the markets and cash savings of the bank. Feel confident, prepared, and in control with physical gold and silver. Give Joe Morgan a call at 1-800-753-8534. Mention Frank Mottek, and you could get $1,000 worth of silver with a qualifying purchase. Call now, 1-800-753-8534, or visit UnitedGoldGroup.com. Mottek On Money continues here in 790 KABC. Good afternoon. Well, as you've been hearing, the scrutiny of how taxpayer dollars are being spent these days, especially a very hot topic as it relates to illegal immigrants. And right down the line, President Trump and Elon Musk facing pushback from Democrats on the Department of Government Efficiency, despite the highlighting of some outrageous spending of taxpayer dollars on various things. Joining us now is media expert, author, and PR guru Michael Levine, who's been following all these developments very closely. Michael, good afternoon to you, sir.
Good afternoon, sir. How are you today?
All right. We are doing it live, and it's always great to have you with us here, Michael. And let me ask you, what's been getting your attention on this Doge drama and the reaction that we've seen?
Well, one thing that particularly has impressed me is the raging stupidity of our Democratic friends. And I'm not a Republican, I'm an independent. But recently, AOC, the popular Democratic congresswoman, at least locally popular, loudmouth congresswoman, member of the squad, issued a instruction manual on how to avoid ICE, how to avoid illegal immigrants can avoid being captured. And the Democratic Party, both local, state, and national, did not condemn that. And I think that is very, very revealing. If they believe that silence on a topic like that is a winning political strategy, I think they've lost their minds, which many people think. But many people think that the Republicans have lost their minds. I just think that when you're in a hole, quit digging. They have doubled and tripled down on a strategy that clearly didn't serve them. And their answer is just to yell and scream and curse and sing and demonize Elon Musk. I think it's a terribly losing strategy. So that is one thing.
You raise an important point. This what you described there is on a government-funded website, right? Basically offering illegals essentially step-by-step guidance on how to dodge U.S. laws, right?
Right. Now, what's interesting is not that one member of Congress did something outrageous. What's outrageous is that not one major Democrat, not locally, not statewide, not nationally, in office, out of office, condemned it. So Barack Obama said nothing. Nancy Pelosi said nothing. Chuck Schumer said nothing. Every major Democrat in America said nothing. So Americans can infer that by their silence, they think this is okay. I think it's a horribly idiotic political strategy, not to mention immoral to condone criminal behavior. So that has caught my attention. The other strategy of attacking Elon Musk, I think, is a terribly poor political idea as well, because what you're saying when you attack him is that you don't think that rooting out waste is a good idea, which places you in a very poor position as it relates to common sense. So I think these are really, if you get beaten in an election badly, you would think that it would indicate some self-inventory and try to course correct, but that has not happened as of that.
Exactly. The Social Security Administration needs some PR after the head of the Social Security resigned following the Doge data request, and coming to light there that people who are 150 years old have been getting benefit checks. What's your reaction to this scandal?
It's outrageous. It's utterly and completely outrageous. I think that what Elon Musk has begun to do is one of the most incredible and important stories of our time. The waste, the fraud. Americans have suspected for a long time that government is inefficient. They go to the DMV, they try to make a telephone call to a political office, and they get a government office, and they see an inefficiency.
Michael, thank you very much for joining us live here. That is media expert, PR guru, and author Michael Levine live with us here on Mottek On Money on 790 KABC. Stay tuned now for the 790 KABC News Blitz with Randy Wang and a special programming note starting tomorrow evening, Thursday night. The Just Help One radio show and podcast presented by the Union Rescue Mission will start right here on 790 KABC. That's tomorrow evening at 6 p.m. every Thursday evening right here on 790 KABC.
No one knows music like Rolling Stone. Senior writer Brian Hyatt talks the biggest music news from the biggest stars.
Raphael Sadiq. So there's a whole lot to talk about. Bodyguard, that's kind of your song. Did you originally intend it for Beyonce?
Everything is for me in the beginning.
Okay. Take us through the life story of the Notorious B.I.G.
Here's this 14-year-old kid who feels like a prodigy.
We were also supposed to have an interview with Ghostface Killah, but he kind of ghosted on us, which I guess is appropriate.
Rolling Stone Music Now. Follow and listen on your favorite platform.